Welcome to Hitting the Bid, the place for retail traders by a retail trader. I'm your host, Jeff, and I'm here to break down market moves, share lessons from my own trading journey, and help you navigate the ups and downs of life in the markets. Whether you're just getting started or have been trading for years, this show is here to help you stay sharp, stay disciplined, and most importantly, stay in the game. Today is Friday, May 9th, and it's the first of many episodes, and I can't wait to talk markets and hear from others about what they're trading. Let's get into it. The S&P 500 via SPY is down $1.12 to 563.90. The NASDAQ through QQQ down about $1 to 487.30, and the Russell also down $1, about 0.5% down to 200.18. VIX cash is down 14 cents to 22.34. VIX futures down 36 cents. That's at about $22. And Bitcoin back above six figures to 102,400 or so per Bitcoin. Bonds are about unchanged here, up 2 ticks. I'm looking through currencies, nothing too notable. The pound up on the day, about 0.4%. Looking to metals, gold up $38, that's a little over 1%. And then silver also up 27 cents, 28 cents to 32.90. Crude oil is crude oil futures up 70 cents, and natural gas up 20 cents. Now, earlier this week on the newsletter, I did talk a little bit about a trade in oil. This is crude oil futures on the June contract here. I'm going to reduce this to 1 year here. I'm actually going to put up some drawings that I had. Now we have a low here, a recent low on April 9th at 54.67 on the CLM5 contract. There's a high here at about 64.87. So we're kind of in the middle of this range here. Now in the newsletter, I did talk about kind of a long bullish trade in oil. Here is Monday's price right here, Monday's candle, and here's Tuesday's candle. I'm going to zoom in a little bit. You can see here, Tuesday put in a nice close above Monday's high. It looks to be trending up here. Now early in the week, I was looking at a bullish trade. I think I'm going to try to size up something here a little bit more neutral. So I have these two drawings drawn here at this swing high and then this most recent low. We're kind of in the middle of the range here. So like I said, I do want to try to stay a little bit more neutral here. I'm not sure exactly if we're going to take a little bit of a breather on the price. This is the trade tab here. I'm going to go to 38 days out. Now, one thing I do want to note, this June 16th, 38 days to expiration, this here is actually tied to the July contract, which is trading a little bit lower at $60.22. But the reason I'm going out to 38 days is because I want to give myself a good amount of duration here, and then I'm in the kind of heart of the decay curve. Really, it's a little bit more towards the start of really where options tend to decay, because right here I'm going to set up a neutral trade where I sell both a put spread and a call spread. Now this here is trading for about 19 cents a credit at the mid price. Now this is futures, so what we do have to do is multiply by 1,000 as far as what we're seeing for max profit and max loss. So with 19 cents a credit times 1,000, that's $190 of max profit. And since this is a 50-cent wide spread here, 50 cents times 1,000 is 500, which minus, I'll go back to 19 cents and just lock this here. So 19 cents, so 500 minus 190 is a max loss of 310. It's going to use about $240 worth of buying power here. I'm at the 20 delta, 21 delta on the put side for my short strike, and the 24 delta on the call side for my short call for the 65.5 call. Collecting a little bit, about 40%, almost 40% of the width of the strikes. Now, like I said, I do like this trade a little bit better now that we've made such a significant move here this week. So we're kind of in the middle of this range here. So I'm going to go ahead and again do this neutral trade here. I'm going to go ahead and send it in. We'll see where we get filled. It doesn't look like we're filled right away here. But this is the trade that I like. This is what I'm going to try to put on here. I may have to move down a tick, but because of that move here this week and where we're in this range here, I like to stay neutral. But again, appreciate you guys joining here for today and tuning in to Hitting the Bid. This is the first episode. I do plan to do one each week. If you enjoyed today's video, don't forget to subscribe and leave a review and share it with a fellow trader. You can also sign up for my weekly newsletter at news.hittingthebid.com, where I share market insights, interesting tickers, and practical strategies to help you grow as a retail trader. Until next time, trade small, trade smart, and keep hitting the bid.